Imagine waking up one morning, checking your bank account, and realizing you have enough cash to buy not just one, not just two, but 20 houses. Outright, no mortgage, no banks. Just wire the money and collect the keys. I'm not talking about winning the lottery or inheriting a fortune from a long-lost uncle. I'm talking about a strategy that, if I'd started years ago, could have turned my ordinary savings into the kind of wealth that lets you buy 20 homes in today's market. But here's the crazy part. This isn't some get-rich-quick scheme or crypto moonshot. It's so boring that 99% of people ignore it completely. Let's put some numbers to this dream. The average house price in the US right now is about $400,000. Multiply that by 20, and you're looking at $8 million. That's the magic number. $8 million could buy you a small real estate empire, a lifetime of rental income, or just the freedom to never worry about money again. So what's the this I'm talking about? What's the strategy that could have made this possible? It isn't flipping houses, day trading crypto, or inventing the next viral app. It's something much simpler, much more boring, and much more powerful. Investing early and consistently in the stock market, letting compounding do the heavy lifting, and resisting the urge to cash out when things get rough. And I'm about to show you the exact numbers that prove this works. Numbers that will shock you.
Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time. Let your future shine, yeah, it's Warren's money time. Wealth on the climb, hear that information flow. Stack it up real high, come here to be in the know. Come here, enjoy the show, cause it's Warren's money time.
Let's rewind the clock. Imagine it's 1995. You've got $25,000, maybe from a bonus, a small inheritance, or just years of disciplined saving. Instead of spending it, you put it into an S&P 500 index fund and forget about it. No fancy stock picking, no timing the market, just a simple, boring index fund. You add $500 a month every month, rain or shine, through dot-com booms, busts, housing crashes, pandemics, and everything in between. Now, let's fast forward to 2025. Over those 30 years, the S&P 500 has averaged about 10% annual returns, even with all the ups and downs. Your $25,000 initial investment, plus $500 a month, compounded at 10% annually, would be worth just over $1.5 million. That's not quite enough for 20 houses, but it's a start. But what if you'd been even more aggressive, upping your monthly investment to $2,000? Now you're looking at over $5 million. And if you started with $50,000 and maxed out your 401k or IRA contributions every year, you could easily cross the $8 million mark in 3 decades. But here's the kicker that will make you sick. Most people don't do this. They start and stop. They get scared during crashes. They cash out to buy a car, pay off debt, or chase the next hot trend. The real secret isn't just investing, it's staying invested, letting time and compounding do the work and ignoring the noise. And I'm going to tell you exactly why 99% of people fail at this, even though it's the most proven wealth-building strategy in history. Let's compare this to real estate. If you'd tried to buy 20 houses the traditional way, you'd need massive down payments, deal with mortgages, tenants, repairs, property taxes, and all the headaches that come with being a landlord. Sure, real estate can build wealth, but it's not passive, and it's not easy. The stock market, on the other hand, doesn't call you at 2 a.m. because the water heater broke. Now, let's talk about what happens if you combine these strategies. What if you'd invested in the market for 20 years, then used your gains to start buying real estate? You'd have the best of both worlds, the growth and compounding of stocks, and the cash flow and leverage of real estate. That's how many modern millionaires build their fortunes. Not by picking one path, but by letting one asset class fund the next. But let's get back to the numbers that will blow your mind. $8 million is a huge sum, but it's not out of reach if you start early, stay consistent, and avoid the big mistakes. The biggest mistake? Not starting. The second biggest? Giving up when things get tough. Think about the lost decades in the market, the 1970s, the 2000s. People panicked, sold at the bottom, and missed the recovery. But those who stayed in kept investing and ignored the headlines ended up with fortunes. The market always recovers. Compounding always works if you give it enough time. Here's where it gets really crazy. Now, let's make this real. Suppose you're 25 years old, just starting your career. You commit to investing $1,000 a month for 40 years, averaging 8% returns. By age 65, you'd have over $3.5 million. If you started with a $50,000 lump sum, you'd cross $4 million, double your monthly savings, and you'd be over $7 million. That's the power of time, discipline, and compounding. But what if you're starting late? Even if you start at 40 with 25 years to invest, $2,000 a month at 8% gets you to $1.8 million. Not quite 20 houses, but enough for a few and a comfortable retirement. The point is, it's never too late to start, but the earlier you begin, the more magic you unlock. And here's the part that separates the wealthy from everyone else. If you're finding value in this analysis, you need to know about my free newsletter on Substack. Every week, I send out exclusive market insights, stock picks, and investment frameworks you won't find anywhere else. It's completely free, and over 2,500 investors are already getting these delivered straight to their inbox. The link is pinned in the comments and in the description below. Don't miss out on these weekly insights. Let's talk about the emotional side. Investing is simple, but it's not easy. The market will test you. There will be crashes, corrections, and scary headlines. You'll be tempted to sell, to wait for a better time, to chase the next big thing. But the winners are always the ones who stay the course, automate their investments, and let compounding do its thing. Now, I know what you're thinking. But what about inflation? What about taxes? What if the market crashes right when I need the money? Great questions. Inflation is real, but the stock market has historically outpaced it by a wide margin. Taxes matter, but you can use tax-advantaged accounts like IRAs and 401ks to defer or avoid them. And as for market crashes, that's why you don't put all your eggs in one basket. Diversify across stocks, bonds, real estate, and cash. Have an emergency fund. And remember, the market always recovers. But here's what the financial industry doesn't want you to know. Let's take a quick detour and talk about what happens if you try to shortcut the process. Maybe you chase meme stocks, try to time the market, or go all in on crypto. Sometimes it works, but most of the time it ends in disaster. The people who get rich quickly are usually the ones who get poor even quicker. The tortoise beats the hare every single time. So what would I do differently if I could go back? I'd start earlier, invest more, and never stop. I'd automate everything, set up automatic transfers to my investment accounts, reinvest all dividends, and ignore the noise. I'd focus on low-cost index funds, avoid high fees, and resist the urge to tinker. And I'd use my gains to buy assets that generate cash flow, real estate, dividend stocks, maybe even a small business. If you're watching this and thinking, it's too late for me, stop right there. The best time to plant a tree was 20 years ago. The second best time is today. Start with what you have. Increase your savings rate every year. Take advantage of employer matches, tax breaks, and compounding. And don't let fear or regret hold you back. Here's the vision that should keep you up at night. Let's wrap up with a vision. Imagine walking into a bank, transferring $8 million and buying 20 houses. No mortgage, no stress, just freedom. Imagine the rental income, the security, the legacy you could leave for your family. That's not a fantasy. It's the result of simple, consistent, and boring investing over decades. No shortcuts, no secrets, just discipline and time. This is your wake-up call. So if you want to be able to say, I could have bought 20 houses if I'd done this, don't wait. Start today, invest early, invest often, and let compounding work its magic. Your future self will thank you. And who knows, maybe you'll be the one telling this story to your grandkids. Shoebox full of cash in hand, ready to pass on the secret. If you found this inspiring, hit subscribe, share it with someone who needs a nudge to start investing, and drop a comment with your own what-if investing story. Let's build wealth together, one smart decision at a time.
Stack it up real high. Come here to be in the know. Come here, enjoy the show, 'cause it's Warren's money time.